Hello, everybody. I've done like 10 intros, and I think this is the last one. Tech difficulties, things of that nature, but it's all right. I'm Nathan Martin, the owner of Atlantic Financial, and your host for the evening or morning, depending on when this comes out, for AIR Atlantic Insider Review. Yeah, and thank you for joining me. I know it's a small following, generally just people I know, friends and family, maybe some clients and prospective clients. And then if you are a viewer who is out of the area and you're just looking for the free content, I can assure you that this is going to be information packed, jam packed, something that you're going to find pretty interesting from start to finish. But with all that said, I do want to get my disclaimer out of the way really quick because we have a decent amount of stuff to get into. Everything I discuss on this show is for general information and education only. Nothing here is personalized financial, tax, or investment advice. Atlantic Financial Management is a registered investment advisor in the Commonwealth of Pennsylvania. For full disclosures, visit Atlantic Financial MNGT.com. Nothing that I say here is a call to buy, sell, or hold any positions. So, with that said, it's been an interesting week. I had some drama with YouTube already, which I can't believe. But man, they shut off. If you're joining me from the video that I made about Cuba, that video got like shut down like a light switch. And I'm posting the picture here so you can see. But it was crazy. I was like, did I do something wrong? I do a lot of deep research just because it's important for me and for any clients watching. Anybody who's done business with me for a while knows I have an answer for what's going on, or at least a speculative answer. And it's my job to know what's happening so that when somebody says, hey, look, how is this going to affect my portfolio? I can have, an educated answer on what could be happening. So I was just doing some research, stumbled upon this crazy information about Cuba and Russia and China. And I was like, this is interesting. Let me, put this up. People can look at it, decide for themselves what's going on. It's interesting. At the very least, it's entertaining. And, I was like, woke up the next morning. I was like, wow, that's quite an amount of people to look at that. And then, like a little bit throughout the day, I checked on it because I was pretty surprised. And it's like it shut off. And so, I was like, did I do something wrong? But we're not here to talk about that either. That's not what the channel's about. This is more so about just general news topics and things like that. But I was like, what did I do? Um, but we'll get right into it. So, first story: OpenAI is officially preparing to stage their IPO. Company led by Sam Altman confidentially filed their IPO paperwork with the SEC. So this really has been a huge IPO season between SpaceX, which IPOs today as of the recording of this, which is Friday. Then you have OpenAI, and then you also have Anthropic. So three huge names are going public. Very interesting to see what's going to happen with that. And do your discretion. Again, nothing that I say is a call to buy, sell, or hold any positions, but people need to be aware of some of the things that go into these IPOs. There's a lot of headlines that are going into the SpaceX IPO, and that might draw some. And this I'm saying might, but it might draw some speculative investors that are looking for short-term gains. It's happened before where IPOs come in, people put a lot of money into them, and it takes there's shaving at the top, and it takes a few years for the IPO to get back to where it was when it first hit the market. A great example of that is actually Coinbase, and forgive me for doing some of this stuff real time, but I'm finding as I start doing this, there's a lot of stuff that I try and prepare for, a lot of research so that I can give good information and good topics for people to go over. And then there's things that come up through speaking where you're like, oh, okay, there's no way I could have thought that through. I would basically have to do this entire thing once before and then come back again and go through it all. So forgive me for going through and doing this real time. That's kind of how it's going to be moving forward. Honestly, I think that's the best way of doing it. So yeah, Coinbase, and the reason I bring this up is because I got burned on Coinbase because I bought Coinbase at its IPO when it IPO'd at like $300, $381. I literally bought that day, and then I bought at the dip. I was like, "Oh, it's going down. This is great. I'm so fortunate. Let me buy more." And I got so burned. So it is what it is. You live and you learn. An IPO doesn't mean it's going to go the way you want it to. And some of the reasons for that is just because you have investors that may, and I was uneducated too, I guess you could say at the time, but you have investors that they invest, they aren't educated on what they're buying into, and they may not be able to properly evaluate a company. I'm not saying that's what SpaceX is or that's what's going to happen, because it could, anything can happen. If you are in the investment space and you are investing on behalf of people, or you're a high level investor yourself, you realize that anything can happen, truly, good or bad. Um, and sometimes when you're developing trade strategies, what you're really doing at the end of the day, and this is um, a very light way of explaining it because it's a lot more in depth, but like a lot of things, it's easier said than done. Um, Investment strategies a lot of the time are a win percent, a win rate, and it's like, all right, well, we have a win rate of 70%. It's important to know that 70% of the time when you see X, Y is the result, but it's not every time. And that's what I mean when I say anything can happen. And even if that is the case, even if 70% of the time you are able to achieve what you believe you can achieve, there's also what's called black swan events, which are statistical anomalies that do come up, especially over the course of time. So you may have a strategy that reliably has been, 7 out of 10 trades you've profited from, or 7 out of 10 positions that you've moved in or out of, has been profitable. Eventually, you'll hit a black swan event where that could be the inverse, and that's what separates a lot of different people. Is okay, I've developed this trade strategy. Now all of a sudden, it's not working out of nowhere. That's where people lose their minds, because then they'll leave the strategy, then they corrupt their own data, and ultimately that's you know not always where you fail. I got to be careful about the generalities, but that's where you can fail, is by not maintaining your strategy. So, and that's not a call for anybody to do that on their own. If you're thinking about doing something like that, you should absolutely consult a financial professional. You can consult me. More than happy to help you out. My number is 267-835-2403. So if you are looking to get into that, let me know. But yeah, so OpenAI, they're officially preparing for their IPO. It'll be a blockbuster season. We'll see. Another interesting story that I saw: 99% of on-time arrival performance for Pepsi's driverless trucks. Not a call to buy, sell, or hold. Which is, very interesting that we could be seeing a world where, the robots really are taking over. And if everybody remembers, back in like the early 2000s, the big craze was robots are taking over. There's going to be no blue collar jobs. You need to be white collar. And it seems very ironic that, in about 20 years, it's completely reversed. And you have people who are saying, oh, the robots are taking over the white collar jobs. It's blue collar that's safe now. So it's just it's interesting because now we're seeing somewhat of a resurgence of the driverless cars. I believe it's like Waymo's. Now you have Pepsi's driverless trucks. I know Amazon's using the drones. So we're seeing a really stark rise in robot automation. So it's interesting. Make of that what you will, I guess. So here's another one. So I was actually surprised to see yesterday or today, Europe actually rose their rates only by a quarter percent, 25 basis points. They rose their rates. They were actually looking like not they weren't going to do that. They all seemed very soft on that approach. But here's another. So what I find interesting and fascinating is sometimes things that you would see that are you know, the counterintuitiveness, right, where you're looking at something and you say, oh well, it should be this, but it's really not, like that weird statistical anomaly that in a room of 23 people you have a 50-50 chance that two people will have the same birthday. um, so too is the market sometimes. So there was actually a stronger than expected jobs report, and that sheared off 4.2% of the NASDAQ composite. And you might be asking yourself, well, if jobs are going well, if we're having economic growth, why would that cause such a stark drop in, you know, in the value of the NASDAQ or the market in general? And the reason being is that signals that the Fed may raise rates. And the Fed's already, Kevin Warsh has already been the kind of guy who's signaled that he's not afraid to raise rates. And I know his economic background, the people that he studied under, people he studied under, the people he studied under aren't fans of the Federal Reserve, ironically. But if they were in his position having to deal with the Fed as it was, they would also be open to rising rates in some of these situations, especially with the money supply that we have, would be their primary goal to raise rates to increase the value of the dollar. And with that said, and then with stronger than expected jobs, the Fed could increase rates. And you might be asking yourself, well, why would they increase the rates if jobs are going well? And the philosophy of the Fed is, you know, as an economic standpoint and almost as a social standpoint, they'll raise or lower the rates depending on how the economy is going. So if when the economy is slowing down now, as they've backed themselves into a corner from all the money printing, so it's kind of tough for them to manipulate the rate in ways that they could in the past. Um, and you know, there's arguments to be made against that, but I would say that they've put themselves in a corner. Also, with the artificially low interest rates, they put themselves into a corner. But that said, they're able to raise and lower the rate to keep the economy in a form of steady growth, and that's the philosophy. I'm not saying that that's what I believe. I'm just saying that that's their philosophy. Is when the economy's heating up, it could overheat. Is their thinking? It'll overheat. So to avoid a huge pump and dump in the economy, what they'll do is they'll raise interest rates before that and keep the economy in check. Vice versa, if they're seeing stagnant growth in the economy, they'll lower interest rates until they start to see some growth pick up again. So it's a way of them ultimately attempting to avert catastrophe, avert an over expanding economy before it heats up too much, or avert stagnation before the economy slows down too much. They can kind of control that with the interest rate. So what investors are doing when they look at the look at the jobs report being as high as it was with that much growth, they're saying, okay, it's they believe, or at least 4.2% of them, or of the money that's in there, believes that that's going to signal a rate increase. So it's very interesting. And then here's the other really interesting thing is, um, with the war going on in Iran, and basic like we've seen costs increase in a way that we would see with a rate increase. Maybe I'm jumbling my words up too much. So judging off of what we just went over, right? If the Fed increases their interest rates, that slows down economies, overheating economies. Well, we just had job growth, yet we're seeing prices go up because of the cost of energy. So one of the things that's happened is, um, with the increase of the cost of oil, that's had a very similar effect that interest rates would. So technically, in some ways, the Fed, when they would have otherwise raised the rates, may not have to because the cost of energy has spiked. So they're essentially getting the same effect without having to do anything, which is very important to note. Again, if you saw my last breakdown, and I do have something that I should get out of the way immediately, but if you saw my last breakdown, you'll see that I absolutely think that there's a huge oil influence on what's going on. I definitely, and I have refined my point, and I'll just get out of the way now. I was wrong about the north south intercontinental, or the intercontinental north south corridor. That's actually mainly used for dry goods, and the infrastructure there isn't. And I knew that when I was talking about it, but I was like, well, I didn't know the dry goods part, but I knew that the infrastructure wasn't really there. They haven't really built it out. There's not much that moves through there. But I was like, yeah, maybe with all that's going on, they might have been strategizing that they're going to push more oil or something through there down to Iran, um, and down through Iran to India, but it really isn't that. They don't use it as much as I even thought they could be. So sorry I got that wrong, but um, yeah, I do still maintain the belief that this is still over oil, kind of preceding the second half of this, because the second half will be all about the conflict that's going on. Um, just to kind of give a little bit of an idea of why I think that, we saw, so I don't want to put the cart before the horse, but I always do this. I'm just going to keep it quick and then move on. But it will segue into a good um, point next. But immediately following Ukraine, Russia shifted there. So after Ukraine happened, it cut off half of Russia's oil buyers, crude oil buyers, right? And it is important that it's crude oil. It's the precursor to all the other petrol products, right? And that's a big industry, a very big industry, specifically in India, is refined petroleum products. I forget how many. I'm not going to get into it. I'll get into it later. So stick around. But um, yeah, half their imports were going to Europe. They shifted, and currently, before um, the conflict in the conflict in the Middle East, and I believe they're still looking to achieve this now, but it's basically the big three buyers, starting with China at a little over 50% of their oil, I believe. India is 30%, and then Turkey is 10%. India took advantage. India has the infrastructure to refine petroleum products, specifically into like diesel and jet fuel and things of that nature, gasoline. So that's like their second highest export behind car parts and car manufacturing and parts of that nature. I'm going to get into it a little bit more. They even purchased a significant refinery or oil field, I believe it was a refinery, in northern Siberia. They're the only country that I know of that has any claim on Russian oil and their oil infrastructure. But the big thing that they would do is they would import. They were a net importer of crude oil. More, well, I shouldn't say more, but a decent portion of the reason why they imported it is because their exports, one of the ways that they would make money, their second highest export, was the refined petroleum products that go out into the world. So, what was great for them was when Russia was sanctioned, they were buying Russian oil at a discount. So they were like, they're making a killing. They're like, we're buying this Russian oil at a discount, which it boosted their profit margins, understandably. But with what's happening with the Strait now, India is stuck paying a premium on Russian oil. So they've kind of backed themselves into a corner. And then they also made such a big commitment with and I'm going to double check all this before, or not double check this. I know what I'm saying is correct, but it's an oil field or a refinery up in northern Siberia that they purchased. But I know they own like 49%, almost right down the middle. And they purchased that. I'm not even going to put the dates on because I'd probably be wrong, but they purchased that. So they're just so intertwined with the Russian oil economy right now that it's tough for them. to move out. But one of the other things that I noticed was um, there's rumors going around, nothing very specific, but it's looking like it's rumored that around the globe there's been two energy crises now within the last 10 years. And it seems that these high oil prices are probably here to stay. And the reason for that is, again, this is the rumor that's going around. Countries, once we do solve this oil conflict and the oil market opens back up again, you're going to see countries conserving their oil and building up oil reserves and having higher strategic energy reserves. That's going to be coming. So this conflict, let's hope that it doesn't hurt the infrastructure, because that'll keep the prices high for a while. But along with that, so many countries are now spooked because of the oil conflict that they're likely going to retain an extra amount. So, as you would know, if you have good financial principles, you have an emergency fund. Well, maybe during COVID, your emergency fund got taxed way too much. So now, when maybe you lost your job or whatever happened, your emergency fund went down to zero. Maybe you went into some not good debt. Whatever happened, that happened to you. Now you might be like, all right, well, now that I am in a better position, I'm going to save even more than I otherwise would have. And you can start to see through that lens and through the oil lens how markets can be affected, even more than you might initially think. So even if the strait does open up tomorrow or next week or next year, who knows when, you're still going to see some after effects from this. So who knows? And anything can happen, really. So, maybe it's not as big a deal, because I do know there is a shelf life on oil. So there's a bottleneck there. So countries may not want to, or I shouldn't say may, depending on what they do, it might not be as feasible, and maybe that strategic reserve just hits a point a lot faster. So I don't want to say we should, but we could see an after effect of this where oil prices remain a little bit high as countries, build up their own national reserves and don't necessarily push that down to the consumer at the consumer level. So we'll see. We got to wait to see, as always. Another interesting thing, sales of existing homes actually rose 3.2% over the previous month, to a seasonally adjusted rate of 4.17 million, the National Association of Realtors said. So there was a forecast. We exceeded that forecast by 0.7%. So yeah, I mean, I don't know. I know the rates went down. People are done waiting. Um, I really don't know what to make of it, because conversely, and I'm just going to scroll down and get into it, and then I'll come back to where I was at. But that private credit fund that I talked about last week, where we didn't have a number on how many people were trying to pull out from the fund. We just knew that they capped it at 5%. Well, now we have a number. It was 13%. They are facing 13, over a tenth of the fund. I don't think I said the name. If I did, I'll bleep it out. But yeah, so they're facing a 13% redemption request, and they're capping out at 5%. So, again, it's just, this is a very 2008 like scenario where, they're in the same space. You have district attorneys from New York, I believe. I know it's attorneys, but you have people going in saying, look, this can't possibly be true. Like, your valuation is just not accurate to what the actual cost is. And then you also have, paired with that, people looking to pull their money out. And I believe they said that all redemptions would be allowed. So them saying that you're not allowed to redeem shares because they've gone past 5% is also very interesting. So just so you know, and always read the fine print. I will say that, because when I first started investing and getting into this, there's a lot of places that make it very easy to invest on your own and get into this space. However, you need to read the fine print, because there were certain there were certain platforms that said if we see um, a certain amount of a sell off in a certain area or a certain investment, we'll shut it down on our end. And I just never invested with those platforms, right? So you need to look and make sure, okay, if I do invest in this area, how liquid is it? And that's not to say that illiquid investments are a bad thing. Sometimes they can be very profitable, but you just need to know what you're getting into, because if it doesn't fit your strategy, then that's a problem. Again, always consult a financial professional. But if your strategy is very short term or could be short term, then you don't want to tie yourself into something that you couldn't get out of. Now, if this is money that you're not planning on using for a very long time, then that's money that you probably could put into something that you couldn't get your money out of. And it's also not to say that that's a good idea either, because it might not be a good investment. So just because you can't get your money out doesn't mean it's the best investment. So, or best is subjective, but it doesn't mean that it's going to be a profitable investment. So, um, yeah, and I do offer a lot of free advice. If you're one of those prospective clients or just regular listener and you have questions, give me a call. I done so much free work. I mean, this is even free work for me. Putting all this out there. So, kind of giving you an insight on some of my experience within reason. So, yeah, so we're also seeing this is not a call to buy, sell, or hold. Semiconductors, miners, and banks are the sectors that will outperform among European equities, Morgan Stanley analysts write. And yeah, anything can happen, but I could see this being true in some ways. There's a humongous push. There's infrastructure pushes, and generally, when people are I say that very specifically, but generally, when there's a huge push for infrastructure, that does signal a long-term strategy, and with the certain national security risks that some of these things pose, um, yeah, semiconductors are important for building AI software. And like we spoke about, the data center rollout that we have going across the country is significant. And ultimately, miners are going to be you need to have these raw materials in order to build. So you can't do this in a vacuum. You'll need everything from farm to table to get this done. I don't understand why the banking sector is going to outperform European equities. I probably have to do a little bit more research into that. But let's see. They're saying, actually, I have it in here. They're saying as a result of higher yields on deposits. Sure, maybe. I mean, it's always going to be a maybe. There's probably going to be people who are pretty upset that I'm saying maybe to that, but maybe. Competing with the European market, I don't know. Okay, higher yields. All right, maybe. I'm not completely sold on that. That's not a call to buy, sell, or hold, but all right. Moving on, U.S. debt sustainability concerns pose a risk to the dollar's valuation. Danske Bank analysts saying a no. And um, sure, and that would be a problem if we weren't the world's number one economy or number one, global superpower. Um, and I do agree in a lot of ways that the devaluation of our dollar is significant. But again, I would say to that, so Greece's currency collapsed. They have nothing to peg their currency to. The United States can peg the currency to oil. So when we look at our debt, it's not that the debt is a good thing, because I don't believe it is. However, our dollar still has value. It has enormous value because that's how you get a seat at the table, through trade. I think that's the huge driving factor behind our presence in the Middle East, because as you saw on the map last week, if you were here, and I'll show it again today, I'm sure, but our oil infrastructure in the Middle East is extreme. Our military presence surrounding the oil infrastructure is extreme. Um, and you got to question, why would we invest so much military infrastructure, so much social capital into this area? And it's because the U.S. dollar is backed by oil, and that's our power and influence over the world, and we can expand and constrict. So similar to how the Federal Reserve can expand and restrict the economy through interest rates, we too can expand and restrict um, other governments through trade. And that's why it's a big deal, when everybody was saying, oh, Russia, the sanctions, this, that, third, and Russia's doing all right. That's why it's a big deal, because you know we were banking that Russia wasn't going to be doing all right. And I don't know the complete ins and outs of the Russian economy. I've only just started scratching the surface of their oil economy, which is, it's important because it's half of their imports, or excuse me, half of their exports is oil, liquid natural gas, and coal. So energy and some petrol refinement. But yeah, I mean, we'll see. The debt isn't good. I don't know when the debt will get so big that it causes our dollar to collapse, or if that even will, because again, like I said, the value is pegged to oil. So um, I'd probably need to do some very serious thinking to give a decent answer in response to that. But of the thoughts that I have had, who's going to come and redeem that debt? And I'm really not trying to cause any arguments or anything like that, but I would just say, as a practical nature, I understand as a philosophical nature, it's fiat currency, it's not really real, but it really is real, because the enforcement of the United States Navy and military on trade and trade goods through the US dollar, and then sanctioning anybody saying you can't use our dollar, cuts them off from energy. You know what I mean? And it's like, all right, well, if like, so you could kind of see where I'm getting at there. It's there's a lot of value in being able to use it. So I'm not going to get on a tangent with that, but I just want to put out that person's perspective and kind of take the opposite side of that a little bit. And it's not completely opposite. I don't agree with the debt. I'm just saying it's not. It's questionable. But the the Fed is, for the first time, and this is very intricate stuff. The Fed is, for the first time, negative on the balance sheet by about $200 billion, I believe. So, you know, that's not good, but really, like, what's going to happen? It's not like you're going to have um, the Fed send debt collectors to Washington, D.C. So, um, and also, inflation came in at 4.2% in May, highest level in 3 years. Um, so, again, it's very similar to hiking the interest rate. And if we're at 4.2%, I would say, if that's the highest that we've had in 3 years, that would signal that we're going to stay flat. I was surprised to see that Europe increased the interest rate. Uh, but again, I just think with inflation like that, with the war in the Middle East, I wouldn't imagine that we would be increasing the interest rate at this point. So, and again, like, this is one of those things, like, countries can leverage, hey, look, there is a conflict, energy prices are higher. Maybe we don't need to actually increase the interest rate, because the effect that we need, an overheating economy, that jobs report, just because the jobs came in at higher numbers. Let's also look and see energy costs, or at least energy costs have pumped inflation up by 4.2%. So maybe we don't increase the rates. We'll see. Um, in Canada, for that exact same reason, that's why I put it right there. Canada, for the exact same reason, isn't increasing their rates for exactly what I'm talking about. But they didn't have a big gain in their labor market either, so they're also just in the spot. And then this is interesting. So I might have mentioned it last week, but I'll mention it again today if I didn't. Uh, Across the country, it seems that truckers' average travel speed has dropped by 5%. The reason for that is they're trying to expand the longevity of their gasoline, be more fuel efficient. we see, and there's a whole, I mean, I've really gone too deep, and maybe I should find different parts of the economy to go into. But it's been fascinating to kind of research oil and how it's pegged to the dollar and how it's led to a number of different tensions across the world, energy and the transport and trade of it. But you can see there's been a sharp fall in China's crude oil imports during the Iran war. That wasn't actually the best worded headline. I'm reading the headline as I go through, but basically, um, obviously, they're not getting the same amount of oil that they once were. But it seems that the country as a whole has cut uh, their oil usage. So very interesting. I mean, we know that China is a very cohesive and um, cohesive country. They have state mandates, people get behind it, and it just seems that the people are behind it. They're sitting here and they've reduced their oil consumption. So very interesting to see that many people can turn it down that fast in response to something like this. But it's also to note um, when this all started, there was all these crazy trades that were going on, and you could see that people were shorting the market, people were doing this, people were doing that, and I was listening to somebody talk about it, and it's in some ways true. All of those movements that happened in some way, and I could look and probably look at the chart and see where they were coming from this because it is a pet theory of theirs as well. But when you move through the market in that way, so when it comes to commodities trading, you have the price that you see on the screen, and then you have the price that people are actually paying. And one of the ways that the oil market was essentially manipulated by these big macro bets was it allowed the stability of the screen price while the actual pay price, what ships were paying, um, what countries were paying, that price skyrocketed. Yet the screen price, the price that people were paying on paper, stayed relatively stable in comparison. And you can even look on the charts. I'd wonder what it is today to see if it's balanced out. But you can see on the charts, it was like literally the biggest disparity between the paper price and the real price of oil. So, there's a bunch of different strategies around maneuvering through these economic situations. A lot of very smart people who, look at these strategies and try and figure out, okay, well, how can we profit from this? The markets do like stability. So, like I said, I mean, it goes so much deeper than you'd imagine. The different intricacies of different markets, and also what people have to offer, right? China imports a ton of oil. They also export a ton of goods, precursors to different medicines. So what they have for the world, rare earth minerals and some of their derivatives. So it's just very interesting to see how countries and markets try and deal with these different scenarios. China will work with its people to drive less, use less gasoline. America will stabilize the computer price, and they were able to do that. And that's like the pet theory of the person, and I would actually think to agree with them in a lot of ways, but we didn't feel the real price immediately either. If everybody remembers, like this war happened and we still had like $2.80 gas where I'm at, 2.90 I think, and then very slowly, but it was delayed. Did we get to what we're at today, like 4.25? So and the reason for that is just from shipping, like literally sheer time. Um, the agreements for the oil that was already on its way here, there was like a 2 week backlog, right? So everybody had already paid up for $2.80 gas, and it was going to take 2 weeks to get there, or a month, I think it was actually, to get there when the conflict started up again and the strait was closed. So we had a delayed effect. but now we're starting to see the after effects. So, and I'm wrapping up on the first half of the show. I think that might actually be it. So, I'm going to take a quick break, kind of compose my thoughts, and then we'll get into the second half and specifically kind of like two top stories. We're going to go through Iran, and then we might go through a little bit of the Russian oil market. Uh, so we'll see. We'll see when we get there. But bear with me. I'll see everybody in a quick moment. All right, everybody, we're back. Yeah, I got a lot to get into in the second half, but man, I'll tell you, I thought I was firing on all six this morning, all eight, and I sat down with a good friend of mine's dad, went over a lot. And I was like, man, I'm burning out my brain power. Then I had my buddy, his son. I spoke with him, and I was like, man, you're taking all my brain power before I got to do this. And so here I am, back at it again with the white vans. Anyways, we're gonna get into it with the oil isn't significant, but I bet everybody just wants to know about what happened with Iran. So I'm just gonna preface this with two huge things. So one, and I put this in the video, the only thing I really need to correct is that from the last video is that north-south intercontinental corridor or intercontinental north-south corridor, whatever it was, it's not applicable. Anything that is moving through there just is not applicable for our discussion. It doesn't have a big enough enough impact on what's going on. The major trade goods that Russia has outside of what they're doing, the rest of their economy is built on the oil, which is why this is so significant what's happening. And the goods that were going through there just weren't significant enough to. I mean, it's significant that major trade route is now cut off, but it wasn't major enough to begin with, at least for our conversation. So it's significant in some ways, but in others, for what we're talking about, no. Then the one thing that I really was scared about. So, I'm going to pull up the map again. If you're listening, thank you for listening this long. I don't know if you'd like to pause. You can pause and you can kind of come back and watch this, or I'll try and describe what I'm talking about as best as I can. So bear with me if you're listening to this in the car or, doing chores or whatever. I hear you. I'm that guy. I listen to stuff all the time. I literally can't help myself. All day I just bombard myself with the news for everything. So whatever. It's actually kind of crazy. I'm starting to understand I'm different like that. I have a natural skill to just sit and listen to just the craziest stuff going on in the world. But yeah, if you remember last week, we have an American base that was vacating the northeastern part of Syria, and they started building up troops at give me one moment, Hurir Air Base, right on Iran's border, northwestern border. And I said, so look, strategically, Iran is bombarding Kuwait. They're hitting Kuwait hard, right where we would be putting troops, because Iraq's border, they might as well not even have a border. They have it there. Similar to how our country was formed, Philadelphia is a great example. Pennsylvania is pretty much landlocked besides Philadelphia. And I'm sure there was an agreement saying, hey, look, let us put a port here, so we have access to the ocean. We don't need all this land. We just want to have a port. So too is Iraq, basically landlocked except for a very small outlet. I wonder if I actually can get the name for it. It's not pulling it up. It's not really even important. But just so you know, that's how thin the border is between Kuwait and Iran. So we staged a lot of military infrastructure there. 2 airports, one's dual use, the other one's completely American, for the American military. And let's not kid ourselves, the other one probably is too. And then just north of that, we have the other air base. And I said, if we were ever to launch an invasion, a ground invasion into Iran, those would be the two launching points. And I also said, which is terrifying, I said if that other air base gets hit, that would signal to me that Iran is signaling they believe that there's going to be a ground invasion. One of the strikes over the weekend, and I'll go through the day by day because I actually got a summary this time around rather than trying to do it off of memory, because that was just just a miserable failure. Um, yeah, so they actually hit that base over the course of the week, which is pretty gut wrenching. It's pretty gut wrenching, and I will start with the other thing that kind of supports what I'm saying is we're hearing peace. Okay, if you understand the demographics of Iran and their military, we hit a hornet's nest, and you just got to run away. That's the only way to calm this down is to leave, and we're not leaving at all. We're basically standing there behind a shield, poking the nest with a stick, and every once in a while the bee gets through the shield, and yeah, I mean here I'll just read the headlines so that I can stop because I'll just keep rambling in circles if I don't stay on task. Um, his saying Wall Street Journal, Trump's Iran deal still has to get past the Revolutionary Guard, and that's true. And if you've been privy to the subject and been following it moderately deeply, you'll know that Iran's military makeup is not what the US's is in most respects. It's more so imagine our military. No, we don't have any centralized military. Our military is solely the National Guard troops around the country. Um, that's what we're dealing with Iran. And like I was saying, imagine trying to negotiate with all 50 states. I mean, you can't do it today. We can't get California and Florida to be even remotely in agreement on anything other than using the dollar, yeah, as a currency. There's really nothing they agree on. And so, too, I mean, I would imagine, and this is speculation, so I could be wrong, and I probably shouldn't even make the comment if I don't know if I'm right, but they're a hyper religious, at least from my observations, they're a hyper religious society. So they do have that pulling them together. Um, so you may be able to get some agreement in that respect, but we also basically killed their pope. Um, we've disrespected the land in a lot of ways. We've snuck attacked them. They will never trust us on face value, and that's just a recipe for disaster. So, anyways, yeah, them striking that base to the north is really just not good because that signals that they don't believe that this is ending. And then, if you also saw my post at the very beginning of the week, I kind of did a shout out on to my previous video, but we further degraded their radar sites. We struck Qasem Island. We also struck Bandar Abbas, their naval headquarters, and then also, and see, this is why you got to do your research and make your maps and go through it. They also have a huge radio transmission facility there. And I'm going to actually go through it, and I actually marked this down as infrastructure, and people need to understand, what we're talking about here. Markets and the military is really just an extension of market influence of a country. And I know that might be kind of making it a little bit more sterile than it really is. If you know me, I'm pretty religious myself. I absolutely believe certain things about this world, and that maybe it's not as material as we believe. And maybe that's the whole point. And again, this show isn't here for me to talk about my religious beliefs or anything like that, but I'm more than happy to speak about it with anybody who would like. But if you're going to understand how markets work, you need to understand how military conflicts work and how soft power works. Again, the US dollar is the soft power we have over the world. We can influence a country's growth or destruction in some ways based off of their ability to use our dollar for energy. So it's really important you understand that conflicts have, and that's one of the things. I mean, we're seeing it today. If you don't think that conflicts are important to the market and how it affects your portfolio, um, I don't want to be confrontational, but you're just not paying attention because your portfolios today, unless you're in a very diversified, and I mean diversified in the true sense, where you're in uncorrelated assets to the market, you're going to be the majority of people are being affected by this. And even if you aren't in uncorrelated market assets, you're still going to be affected by energy costs, probably. Um, I believe the only thing that's really insulated by this is probably the real estate space in some ways. Not a call to buy, sell, or hold that, but the real estate, the domestic real estate space may be, but how long until certain, and that's initially how long until other certain factors play a role into um, the supplier demand being affected due to people's purchasing power. So you do need to understand these things. And when you're understanding conflict, you need to understand the logistics. These things can't operate in a vacuum. The logistics of a conflict matter because that's how you're able to continue being a country, defending your borders, defending your natural resources, defending what makes you profitable as a country, defending your country's influence upon the world. So just because they have a standing army and they might have standard defenses, one of the things that they do more than anybody else is they build missiles. They have missile factories. They're extremely resourceful in building their missiles. Something that the United States doesn't do because we're more so building the infrastructure to impose safe travel over the seas around the world, and we have the dollar as our missile. That's how we control things. I might it's starting to get dark in here. I was trying to use the natural light. Let me, give me one moment. Turn that on. There we go. Now I seem like a real professional. So, anyways, yeah. So you need to understand that when we attacking the infrastructure is very important to the conversation. Um, and like I went over yesterday, we're in a glass house scenario. Right now, Iran really holds all the cards because we can't stop them from firing missiles, and all of the oil infrastructure that we protect and is essentially ours in a lot of ways is completely vulnerable to them, and it got to be one of their bargaining chips that nobody's talking about. So, anyways, so to go back into it, I'm going to read a little bit about this radio transmission hub that they have. So, Banar Abbas is Iran, and I'm undoing the top button. We're going to get a little bit relaxed. It is Friday. Banar Abbas is Iran's primary commercial port and naval gateway to the Persian Gulf and the Indian Ocean, the economic and military center of Iran's southern coast. Beyond its naval role, the port handles the majority of Iran's non-oil imports, including food, medicine, and industrial goods. A radio transmission facility here was struck in late March, killing at least one person, targeting communications infrastructure that coordinates both with military operations and civilian maritime traffic. Banar Abbas's port disruption compounds the Strait of Hormuz closure to create near total economic isolation of Iran from seaborne trade. So not only did they strike that, they struck their naval headquarters, and then they also struck Qasem Island specifically, which is another ground control station. And again, I can only imagine, and this was a further degradation and multiple strikes, from what I understand. It's a little bit more significant than what had happened previously. The previous strikes were significant enough, but this was a little bit harder. And again, it just, if you're going to expend, now that maybe I'm reading too much into it. They might be easy targets because we have the naval capabilities right there to do it. But again, when it comes to conflict, and I wasn't in the military. I wasn't an officer. I was just, technically a foot soldier, right? but I have enough of an understanding to know, we had things, we had small time strategy, and the Marine Corps is decentralized in a very similar way to where even an individual squad or even an individual fire team can operate on their own in a lot of ways, especially if the leadership's doing their job and passing down the information down through the ranks. If you can do that and then you have adequate leadership below you, you can almost speak with somebody one time if you give them good orders, and they can go out and do exactly what you need them to do, and they'll know what to do if they can't get it done. And that's what decentralization is hey, what do I do? A big thing about giving orders is, what do I do if it doesn't work? It's almost, what you do if it doesn't work is almost as important if it does work. And I went through an advanced course while I was in, and writing orders. When you're writing an order, one of the things that you're doing is you're literally writing all the things that you could possibly think are going to happen, every little thing, and you will prepare for every little thing. You will prepare yourself, the people under you. You'll prepare at every single level. Every single part of any type of mission is broken down to very, very, like, from where the time you wake up, not even that, the time it took to get ready the day before or the week before, or depending on how big it is, every little part is thought through. And so I can only imagine when they're giving the orders to strike these areas, you know, just based, and maybe this is why they cut that video off, because maybe I do know a little bit too much, but they're, if they would have a plan, and just like any other military would, mind you. So again, I'm not saying anything anybody doesn't know. You can literally look up a 5-paragraph order on the internet and you can figure out how to do it. So again, what I'm saying is public knowledge. It's just little known knowledge, but you can find the information out there. I'm not spilling any secrets. Um, but yeah, one of the things they had to have done is they had to have looked and said, we have submarine assets in the area. We can only imagine that they have radar sites in the area, especially right there, because they can monitor the strait both above and below. Let's hammer this with every opportunity that we have, and let's try and pass a sub through. Absolutely. So, I don't want to read too much into it, but I definitely kind of am trying to give people uh, good diversified perspective. Diversify your perspective on this situation. Um, so yeah. So that's a good initial place to get started. Now, what's interesting, apparently, well, we'll go through what initially started it. So, Israel. So we'll just go back. So there was a ceasefire. They said Israel needs to stop targeting southern Lebanon. They did not stop. They continued. Where did they hit? I believe they hit Beirut. I've got it right here. Yes, they hit Beirut. In response, Iran responded and sent some rockets to Tel Aviv. Israel responded by striking Iran in a few different sites, and we're going to go through each one of them. But most of them have a common goal. They struck a site in northern Iran, which was basically another underground missile complex. They struck a second one, and I should say northwestern Iran, very close to the base that was the American base that was actually hit. They hit another underground missile facility in, I guess you could call it the Midwestern Iran. And then finally they struck, well, not finally, they struck a huge petrochemical zone. So it's a refinement of sorts. So they basically just hit a huge part of Iran's oil production, similar to how Iran struck Qatar's natural gas production, or natural gas refinement, really. Um, And then they also struck anti-air sites in the middle of Iran. Specifically, well, I shouldn't say specifically. It's unclear, but Israel fired on Isfahan, which, if you know Isfahan, if you know the area, there's a huge air base complex there. It seems that they've already struck them, or we struck them in the past and took out some of their air capabilities. Maybe they put them back online, and the IDF just hit them again. On top of that, there's a nuclear and missile complex also in there. Yeah, it's one of the places. I mean, here I don't really have the best notes on if it was degraded or not, but it's been repeatedly struck. So, and I do know that it's built into the mountain, I believe, or maybe I guess I don't know if I'm saying I believe, but I do know Isfahan is well defended, just like Fordo. Um, and then it seems that there was joint strikes from U.S. and Israel on Tehran. Now, the specific damage, I have the note here, the specific damage to the infrastructure is unknown, but the targets were the IRGC facilities located just outside the capital, a manufacturing complex, a barracks, and a local guard base. So Israel's theme really was in Israel's interest. They were trying to knock out their missile capabilities, which, for obvious reasons, um, they really, I mean, they hit a SAM site for their to knock out some of their air capabilities, but it was only one spot. And I should have noted, but I didn't. It's very underreported, but some of the strikes that happened in Kuwait were from Iranian aircraft. It wasn't from a rocket or anything. It was from the Iranian aircraft. So, the Iranians actually were able to get within Kuwait's airspace, basically American controlled airspace, and drop a bomb from a very old aircraft. So, nobody's really reporting on that. I'll throw it in there for you, just, so you know that I'm doing my due diligence, my research. Um, but yeah, I mean, the significance of hitting a SAM site, I don't know. If there's a specific channel, I wasn't in the Air Force. I do remember doing some like anti-air uh, training, like calling in. You see an air site, you can call it in. And generally, it's called a SEAD mission, and um, you're using other assets to knock out anti-air sites, so that your air assets, whatever air assets you have, can come in. Again, I wasn't an officer. I didn't do a whole lot of time, so I like don't know some of the maybe high level stuff, but I do know just some general knowledge that kind of gives me a little bit better insight in some of these military activities. But yeah, so I mean, could that have happened, and could we have had some type of stealth mission happen? Who knows? And probably, because I bet I'm not even reading through the actual breakdown. So I probably should do that. I'm just literally going through the different sites that were hit by Israel. But Israel did start this. I'm obviously trying to focus on the American side of things because I think that there's a better story there. But yeah, I mean, maybe that was what they did in conjunction. I don't know. I actually, damn, see, this is what I'm talking about. You get ready to start something and you start talking and you realize all the stuff you should have looked up before. But I would surmise that maybe the attacks on Tehran happened after they struck that SAM site, and um, U.S. air assets to pass through and strike Tehran directly. Who knows? I mean, looking at the map here, there's a lot of different military sites, a lot of different Iranian bases, significant bases between um, between where any aircraft would be launching from. So that air site, I don't think it's that significant, but I don't know. You know what I mean? I'm not in the back rooms to find out. So let's get into what happened. Um, it all spurred with Israel and Lebanon. The talks collapsed. The U.S. enters with new strikes on June 9th and 10th against multiple targets. And Trump accused Iran of downing a U.S. helicopter near the Strait of Hormuz. And this is actually very important to talk about. So that's what the U.S. is claiming. However, Iran reported that they had nothing to do with that. So that's significant because Iran's been pretty forthcoming in claiming that they have or haven't committed strikes against the U.S. So when we have the U.S. saying one thing and Iran saying another, maybe it's a form of statecraft. Who knows? At this point, who knows? So, um, and there were a lot of explosions reported. So we don't have actual hard. A lot of these we don't have actual hard uh, hard explanations, obviously, because the reporters that are there are possibly unsympathetic to America, or the American reports that we have are watered down because they're the American media. Um, but it's saying, there were explosions reported near Tehran, as well as near the Strait, Bandar Abbas, Keshem Island, Karg Island. I didn't actually put that there was a strike on Karg Island. I had a hard time finding anything specifically about what happened at Karg. There was the U.S. did strike relatively within Iran's borders, so we've already gone over what happened at the Strait. Should be noted too. Last Friday, I believe it was, we actually while I was doing the show, um, we knocked out some of their drones. So important to note. But then there was also um, an airstrike in the vicinity of Shiraz. And the only thing, again, they're not explicitly saying that certain places are struck, but in that area, that immediate area, is the Shiraz Air Base. So it's southern Iran's main tactical air base, positioned to defend the Zagros Mountain corridor, and provide air cover for Persian Gulf operations. So this is probably where that jet flew out to hit Kuwait, I'd assume, because that's its mission structure. And maybe that is kind of painting a clearer picture that we probably had some type of air operation up in there. If we hit that site, and then because if you look on the map, you can see that air station is relatively close to the Gulf. The only thing between, if you're looking at drawing a straight line between that site and Tehran, and I'm talking a literal straight line, it doesn't have to be that way. They could have came in from anywhere, but there's a refinery that's on the Gulf. That's the only really major Iranian infrastructure, and then I believe there's a naval air base right on the port Bushehr. Um, but anyway, so you have the refinery. I'm talking straight line to Tehran. Actually, I'm probably going to have this up so you'll be able to see it. But for those who are listening, then we struck the air base that's directly north of that, and then directly north of that we have Isfahan, which is where the IDF claimed to take out the anti-air sites. And then beyond that is the Natanz nuclear facility. I got to change that to infrastructure. And then you have Fordo. I got to change those to infrastructure. So yeah, I guess I take that back. Maybe that was a coordinated air assault in some ways, because the only air assets beyond Bushehr, the only air assets that they would have to stop our incoming air were hit. So there's something there. I really need to change those two. I'll do that after this, but yeah, maybe there's something a little bit more legitimate there. So, anyways, Trump called off the remaining threats or the remaining strikes to Iran, setting a breakthrough in talks to end the war. Now, again, I don't know. I don't know. I'm just seeing a lot of signals that, even going through this just now, seeing a lot of signals that we and they, and this is just part of it, a very slow, a very, very slow and methodical approach to what could be some very serious military action. Now, if I'm going to be counter arguing my own point, I would say We did pull out one of the aircraft carriers. That's pretty significant. Drawing the third aircraft carrier of the out of the area was very significant. Uh, so there's that, and I don't believe the troop movement. Like, if I'm being honest, from what I see, I don't believe the troop movement out of Syria to that Iraqi base in the north is specifically for this conflict. I think they just are done with Syria. We have essentially our guy in there, and I'm not saying that I agree with the guy. I know what he's done, and um, I'm absolutely not a fan of him, but I'm just saying, as far as the United States is concerned, we have somebody in there who's going to respond to what we asked them to do. Um, and maybe that was a part of their deal. I don't know, but I don't think that base leaving really is. It just might be a win-win again. One of those very obvious moves. We don't need to be in Syria. We can build up the base because it's not a lot of troops that moved. And again, the numbers are out. The numbers are out there. So what I'm saying isn't it's not a state secret. What I'm saying. So it's not like we're reinforcing the base specifically to reinforce it. It just seems like typical troop movement from the downgrading of a base that we don't feel like putting the money in towards. Probably with a primary or secondary objective of reinforcing the base on Iran's border, sure. But I don't know. I like there's good counterpoints. Obviously, it's a good thing that we're speaking about peace regularly. That's probably the best news. Um, but at the same time, it's just these targets that are being hit are very, very strategic. Oh, and I forgot one more strike, excuse me. And then there was a final strike on Bahrain, specifically on our Fifth Fleet headquarters, which the Fifth Fleet headquarters covers the entire area, the Arabian Sea, Red Sea, and the Indian Ocean. So, that's kind of your Iran update. Um, I just, from what I understand, and I want to be wrong, and I think I could be wrong. I'm open, very open to being wrong. This is going to be something that is going to be extremely hard to get out of because the Iranian people, like the Iranian strategy, and if you look into other major conflicts, like the preceding of World War One, I believe, no, World War Two, the preceding of World War Two. So Iran is so similar to Germany in World War Two and World War One. It's just so similar to Germany in general. I just drew another conclusion, but in a lot of ways, this is similar. They they have Iraq and Afghanistan and if you're listening to this and you don't have the map, Iraq and Afghanistan sandwich Iran in the middle. Iraq's to Iran's left, and Afghanistan is to Iran's right on a map, or I guess east and west. Iraq is to Iran's west, and Afghanistan is to Iran's east. And it's sandwiched right in there. Germany had a lot going on following World War One, and they were sitting there saying they had the dual. It's something. The quote was like, "If one strikes, we strike both," and that was because the reason they had the Blitzkrieg and they developed such fast warfare was because the German generals were sitting there saying, "Look, we can't get bogged down in a stalemate. We can't draw these lines again because that'll kill us. A war of attrition cannot happen again." That was terrible, and they lived through World War One. A lot of them that I mean, not all of them lived, but like the ones that did live had that experience, and they said we can't do that. So when they were drawing up the German war plans, they were no fans of Russia because Russia had some cultural differences from them that they posed would be existential. And then France, for very obvious reasons, um, there was the Rhineland that the Germans wanted back desperately because they saw it as their land. France didn't think so. So there was that contention there. So they knew that the Russians and the French were not their ally, and they had also, um, everybody understands. Oh, great! Of course, I know all this stuff, but I forget the Treaty of Versailles. Geez, I almost blanked that out, but everybody kind of understands that the Germans were taken advantage of in the Treaty of Versailles. So, anyways, yeah, they had I'd have to go back and see why they partnered up with the Russians. But ultimately, we all know that Hitler did turn on the Russians partway through the war, and I would surmise that that was one of the reasons. Was the war plan was always to punch both. Um, it was more so in the beginning. It was punch both at the very beginning. And what it was, and it did play out exactly that way. If I'm really thinking about it, I'm kind of talking on something that I haven't looked at in a while. But they were like, we punch both as fast as possible, and they went through Poland, went through France, gained their foothold, and then turned on Russia, which was the plan. That was always the plan. Because they just couldn't trust either one of them. They couldn't trust France or Russia. So their battle plan was always to hit both. And so the long story short is Iran has been developing this battle plan for a long time, probably decades, because they know the United States since like the 50s has been looking to the early oil strategy. It's one of the reasons bin Laden was so upset with America early on into um, the the following World War II. We built a lot of relations in the area, started using Middle Eastern oil, putting in our own oil infrastructure. And yeah, it's one of those things where we had to have known for the longest time, especially when we started modernizing militaries and seeing that Iran was having modern military capabilities, putting in these different sites, these missile sites within their mountains, that we were building up this infrastructure in a glass house. So, um, yeah, they've had nothing but time to think about what would happen if this day were ever to come, and vice versa. So have we. So, and I wouldn't say I didn't follow this really closely until it happened, but looking back on it, of course, Iran has complete control over the strait. Absolutely. If you like literally, if you just look at a map and you look at their infrastructure and look at their geological foothold that they have, I mean, it is really America is God's country through and through with our geological attributes and our advantages. But when you just look at Iran, you can see geologically, it's just a great position to be. It has a massive mountain range that they've dug into, and it has this little inlet that's straight that basically really truly blocks traffic from going in. The traffic has to divert and directly approach Iran and then turn its back to Iran and leave. Um, so it's just such a great buffer, and Iran really has such a choke point. It's just a natural pincer movement that anybody who passes through the strait can be struck at both sides. So truly, just a predicament to try and get around that. An ultra defensible position with an ultra advantageous choke point for the world's economy. Um, and they hold a lot of cards. And then on top of that, they're also like a keystone country because through Iran, all the other stands, India, China, Kazakhstan, parts of Russia, Iran is great real estate to pass goods through to Africa and to Europe. So if you don't play nice with Iran, you're going to have to take an extended route, which we'll talk about Russia's extended route here shortly. But just really, really a problem for us. And so to cap it all off, because I'm gonna have to take a sec because I need to get a better camera. This thing only has so much life. I have 10% battery in it, so I'm gonna have to charge it to kind of finish everything off to go over Russia. Um, but yeah, they've had nothing but time to drop their war plans. And what the war plans are essentially is have a bunch of different factions, military factions around the country, and I just don't see how, um, with their culture, with their feelings towards the United States, also with our track record of sneak attacking them multiple times, the sites that we've struck, the sites that they've struck, I just don't see I don't see how we move forward from this unscathed, or not even unscathed. I don't see how we move forward from this and truly walk. All right, so we're back. Had some technical difficulties, but we're gonna get right into it. So when it comes to the Russian story, and I forget where I completely forget where I left off on all the other stuff. So whatever it was, I'm sure I'll rewatch it and be like, oh my gosh, I can't believe I left on that note. But to describe the Russian story, I'm just gonna describe, and there's a lot of different places to start. So I don't necessarily want to start with the context, the vocabulary yet. We'll get into those specifics a little bit later on, but we're going to hit the broader arching scenario, or the broader theme, which is, from my research, it totally seems that this war is just another way of cutting off Russian energy and protecting the US dollar. That's my big thesis, and I believe it's supported, especially with some of the more current news. But to put a recap on the story, prior to the Ukraine war, Russia was, sending roughly half of their oil export. Oil and energy makes up 52%. So coal included, liquid natural gas and oil, crude oil, make up over half of their exports. Half of that, over half actually, was going to Europe. And so that was cut off with the war. And even during the beginnings of the war, many Europeans, Germany in particular, were still using oil energy. So, there was Nord Stream that happened. And now today, there's some export to the Balkans still, even through the current war zone. Actually, Ukraine, it's pretty controversial. Nobody really talks about it, but Ukraine does facilitate some oil export for Russia. Basically just making sure that they're not hitting any of the oil shipments, and the oil is getting to where it's going to. And it should be noted that there's been some sanction waivers due to the strait, that the United States is allowing some Russian oil out. And we'll get to that in a moment, but we're just going to recap the theme in case you don't want to go back and listen to the other video, especially. And I doubt anybody's really even listening to this part. But for those who might be, here's the breakdown. So, following the war, Russia made new ties, specifically with India, not China, but specifically with India. But right now they're exporting to Turkey, roughly 10%, India 30%, and then China like 40 or 50, and whatever remainder is going to, minuscule random countries like the Balkans, and their shadow fleet. And that, it's a lot tougher to figure out what their actual shipments are. But that was pre-Hormuz, and it still is pre-Hormuz levels. And throughout some of my research, I found India actually put a lot closer ties. And forget about the north-south corridor. That was kind of hot garbage. I'm kind of upset with myself that I put that out, but it's going to stay up. Just note that I was wrong. It's mainly dry goods. It's nothing worth our time to discuss. It's important to note that there's a supply route there so that we can kind of monitor that and see what goes through. But as long as the strait's closed, it has no real effect anyways, because Iran has enough oil. They don't need any Russian oil from what I was reading and seeing. They're a net exporter by far, and they send a lot of their oil to China. And we'll hit Turkey just because it's quick, but you can already see like the hyper-westernized opposition that came out of nowhere. I know that Erdogan and Trump apparently have good personal connection, but as far as the government's concerned, I'm sure that there's hyper pro-Western organizations who are making sure that our oil interests are protected, and Turkey is no exception. So I think that's why you're seeing a lot of the influence on the opposition party. It's weird. It's like Erdogan's fairly Western supporting in a lot of ways. And then you see that there's another faction that just happens to be hyper Westernized. So I don't know. I've just seen too much to know that I would say that there's probably some American influence specifically to avoid any oil, any more oil or energy relations between the two countries. So then we've got India. India is a very important figure. So Russia already had a trade agreement with Turkey and with China. They were exporting their oil fairly regularly between the two. However, India is the new player, and what makes India different than, and I should have looked up what India's pre-import was, who they were importing from, but what makes India different than either one of these countries is that India, their part in global trade is refinement of petrol products. And that's extremely important. So they're a net importer, not just for energy needs. And this is something that everybody should be aware of. Some countries import refined energy in the form of, diesel, gasoline, aircraft fuel, and when you take crude oil, there's many different products that you can make from it, because there's a lot of different byproducts that come from the refinement. I believe there's like seven different layers of refinement, or I shouldn't say layers, but 7 different refinable attributes to oil. There's a plethora, which is important to know. And so like Russia, again, I should have just done this because I took the break. I should have just looked, but I believe Russia's at like less than 10 refineries. Notably, one is half owned by India, or India owns half of it. They're the only one that I could find from my research. So India has very close ties now with Russia. But yeah, Russia only had, and they have a ton of oil fields, and they produce enough oil that half of their exports are energy based. And I believe it's a quarter specifically is crude oil. And India imports that, and they have 23 separate refineries. So they've built up their country's infrastructure to support oil refinement as their gross domestic product. Specifically, they do a good portion of aviation fuel, which is also very important. So, and it's their second biggest product behind car parts and cars and manufacturing and machine parts. So their second biggest factor for their GDP is petrol products, and they're a net importer for petrol products. And if you look, they're right at the gate of the Strait of Hormuz. They were obviously taking a lot from the Strait, and then what they were doing was they increased their profit margins by buying cheap Russian oil. And we're going to go really quickly. So this is where I'm going to take a side note and go through some of the vocabulary. So oil is broken up in a few different ways. You have sweet, sour, light, and heavy. And, well, you have medium, but light and heavy. We're just going to keep it very, very simple. So sweet crude is, and sweet and light basically refer to how easy it is to refine. Maybe I'm not going to get into the super specifics, but sweet and sour refers to how much sulfur is in it. Light versus heavy basically refers to how easy it is to refine because of the other impurities. And Brent in particular is important because Brent comes off of the Norwegian coast, and it's just one of the easiest refinable sources of oil that we know of. WTI, West Texas something. Of course, I just can't keep West Texas Intermediate. That's also important. It's like one of the second best refinable oils, and then it just kind of goes down from there. The Ural is the Russian equivalent to the benchmarks, and it's not as easily refinable as Brent or WTI, but it's still kind of up there from what I understand. And there's a market for the refinement of these goods. So it's just the precursor, similar to how India has such great soil for rare earth mineral deposits, but it's China that refines those into usable magnets, and other things like that. I really only know the catalytic converters would be another one. So India has a great deposit of rare earth minerals rich soil. China has the infrastructure to process that into goods, usable goods. Russia has great crude oil in the ground. India has a great refinement base and infrastructure to make usable oil goods. So that's how you need to look at this. How you need to look at this situation. So just because a country has a lot of oil doesn't mean it just turns into energy like that. It needs to be refined and processed. And there's parts of the global supply chain that make an effort to do this better than anybody else, and India is one of them. So India has this great profit margin, and just so you know, so we went over sweet, sour, what that means, how Brent is the best, and that's why you hear when people talk about Brent oil, what oil's trading above or below. Russia was trading at the early onset of the war at a $25 to $30 a barrel discount to Brent. And that doesn't reflect the quality of the oil entirely, because it's there's always been that quality difference. But and I believe the quality difference on average that's saying here is, or that's current discount, but I believe that it's historically been $1 to $3 has been the Russian discount to Brent is $1 to $3 a barrel. So it's trading at 25 to 30 of relatively easy to refine crude oil. Relatively, if you're looking at the list, for the most part, the long and short of it, you're always going to need refinement. It's just sometimes it's easier, and I'd want to see what specifically all of their oil, because they have a few different oil sites. But whatever, we're not even going to get into that right now. Maybe I'll do some deeper research on that eventually. But they've been at a steady discount, $7 to $8 discount recently. Well, the war in Iran happened, and again, I absolutely think this was to leverage, basically say, all right, the U.S. wanted to say, all right, India, China, you guys want to do business with Russia and their oil and their energy and not us? Well, you're going to see what the cost is to doing business with Russia and their and Russian energy. And basically, we put them in a spot where they had to be committed to Russian oil and Russian dependence over U.S. oil and U.S. dependence. And we put the heat on them pretty hardcore. Again, we all understand now that India has a vested interest in Russian oil through the plant that they own up there. And as this was happening, the U.S. had allowed temporary waivers, and Russian oil traded at a $7 to $8 premium a barrel. And India was forced into buying this oil at a premium, and they were getting slammed. And remember, their exports, their GDP depends on their oil exports, or at least a good portion of it. So not only were their exports going up relative to their competition, which would be also something to note, because they're the ones that are buying sanctioned oil. Everybody else is buying, fair trade oil. So India, who's exporting oil-based products, is now, beholden to Russian oil prices trading at a premium to Brent. Oh, don't tell me. I don't know if you can hear that or not, but I just want to get this video done, so I'm going to go through it anyway. So, pardon the interruption if you didn't hear that. It sounds like somebody's drilling or something. So they're trading at a premium. Right now, it seems that they're trading at a $2 to $3 discount. I see where I was probably getting that wrong. They were probably trading at a premium earlier. because they were more expensive to refine down anyway. So, I mean, whatever. Look, there's a lot that goes into that and the pricing. So forgive me if I'm wrong and I'm not getting these facts entirely correct, but these are the facts generally as they stand. And this is this timeline that matters. They were trading at a discount, then India was forced to buy at a premium. And then on top of that, the U.S. put even harder restrictions on them by saying, hey, look, the waiver's coming due. So it's pretty unclear right now if India has moved to Russia's shadow fleet, but basically the United States has threatened sanctions on portions of India in some ways, and saying that, look, hey, this agreement is waived. Like, you can't really buy any more Russian oil. So it's really unclear, very unclear from what I was looking at. And maybe, there will be more clarity next week after the dust settles on India, but it's not talked about, and it is important. It's very important to their economy as well, the price of oil. They're very beholden to it. Same thing with China. China is beholden to the Strait, and on top of that, they're very dependent on Russian oil. And I went through and kind of pulled out some of because they're the bigger story. India is a world power. They have a seat at the table. But they are not a superpower in the same way China, Russia, and the United States are. So China's really been the big question. They've unapologetically been taking Russian oil. You'll actually see, I feel bad. I was kind of speaking out of turn. I didn't plot in the infrastructure that I needed to fully understand the Russian picture, and I kind of spoke way over my head with that, so I'm sorry. But, I'll pull that map up too with some of the imports and exports. But when you look at the map, and you can probably see it right now, there's the ESPO pipeline, and then you have just the standard Russian crude oil pipeline. I don't think it has, I'm sure it has a name, but it's not the endeavor that the ESPO was. But you can see, and of the map that I have, there's other maps that show the smaller pipelines that branch off of these. These are the major ones. There's other smaller pipelines. And the Russian oil is being literally pumped straight into mainland China and Beijing. So, it was very foolish of me, and I'm sorry about that. Hopefully everybody can see that I did a really good job on breaking down Iran, and maybe I was onto something just intrinsically about Russia, but I did get a lot of stuff wrong about their supply chain. I still maintain the theory, because you can see what the fallout was specifically with China. So anyways, yeah, you can see the Russian infrastructure that just pumps oil into China. It's there, and it's heavy. When we look, Russia's number one importer of their oil is China. And China imports mainly Russian oil at 17.4%. The next highest is Saudi Arabia. Iraq is at like 12%. Saudi Arabia is at 14%. And there's not really, well, we have officially Iran does 5%, but it's likely higher. There's some contention around purchasing Iranian oil. So we know Iran sends 90% of their oil to China. And maybe we could figure out like an unofficial, because China's not claiming that they've received that much from my understanding. So it is what it is. But anyways, it's important to note, yeah, China mainly imports oil from Russia, and they're diversified, don't get me wrong, but they're number one exporter, or the number one country they import oil from is China. And China is Russia's number one oil provider. So we're at an interesting crossroads with that, because like I had mentioned, what do you think Trump was going to speak with Xi Jinping about when he's saying, yeah, look, we want you to do energy we want you to do energy deals with the United States, obviously. That can put to bed this whole yuan thing, trading in the yuan. They're our greatest threat to the US dollar. And it's just like, we're very close to owning all the neighborhoods on the monopoly board. That's like the best way to look at it. And what are you going to do when you're able to get that last house on the last street and start building hotels. Iran, China, and India and Turkey are the last spots on the board that if we can seize those spots, then basically we win the monopoly game between us and Russia. So that's a really important thing to know, and I just think it only further validates my theory because Trump came out following his state meeting with Xi Jinping saying, yeah, they're going to buy energy from us. And there was a for sure deal of a $43 billion liquid natural gas deal between us and China. But Trump also came out and said, yeah, they're going to buy oil from us. Now, China, and here's the thing, you do have to take some things with a grain of salt, but I don't know. I just see enough pressure being involved with the way things are right now that I think that this actually really did come to fruition. And China borders Russia, so Xi Jinping basically was like, we made a structural agreement. Trump's saying that it's set in stone. And you got to think about Xi's position here. He's Russia's number one buyer, by and large. Russia is very dependent on Chinese business. And if Chinese business slows down, that's an existential threat in a lot of ways to Russia, especially because they've invested so much money in infrastructure to supply China with oil. They border Russia in a lot of ways, with exception to Mongolia, breaking up two of their focal points. And then, again, they're basically access to having any significant, and I wouldn't say basically any access, maybe that's a little bit too much, but a significant portion of their GDP depends on Chinese business. So for China to even be hinting that they're going to step away and limit their exposure to Russian oil is a humongous blow to the Russian economy. And then with Russian oil being expensive, or at least we can turn up the heat, and basically at this point we in a lot of ways control the price of Russian oil. It's almost a no-brainer once again. So now that I have had a little bit more time to research, I really can a little bit more confidently say that, yeah, this, even though I was wrong about maybe some of the methods of Russian export, I definitely think that I'm right in the sense that a lot of what we're seeing right now, this Middle Eastern conflict, is because of that. And the Red Sea is not safe passage also. So let's kind of shift gears a little bit. I've made my case that China is stepping away from Russia, and also, just so we're all on the same page, we all know plastic's important. We all know plastic out of China is extremely important because everything that has made in China in it is almost always plastic, so we have also cornered that part of the market in regard to China. We are the number one ethane supplier to China, and I believe we're the only supplier, like we made that agreement, that they only buy ethane from us. And going back to what I was saying, how oil is refined into separate products, ethane's one of them, and it's actually the precursor to plastic. And obviously China deals with a lot of parts, they deal with a lot of chemicals, they make, create, and produce a ton of plastic. And that could be probably its own video, the Chinese supply chain to creating plastic. That might actually be a really interesting video just to do on its own. So anyways, so we'll shift gears now and talk a little bit more about how Russian oil is affected by these trade routes. So, the Espo pipe, China's pretty self-explanatory. I'm just going to make a quick comment on the Druzhba pipeline. It's the friendship pipeline, and it's still being utilized in some ways, and Ukraine does facilitate some of the oil that transfers through there. But you can see here this lightly dotted red line. It's lightly dotted for a reason. So and I'm really upset. You're probably looking at this. Maybe I've added the stuff, but I don't know. There's just been so much work that's been done to this map that I really just don't feel like doing much more right now, especially because I just want to get this video out. But you can see here, I'm probably showing you like the Black Sea route, and I'm definitely going to just have to zoom in. So there are a couple different ports in here, and a significant oil terminal right here in the Black Sea. And with the war going on, even though Ukraine is allowing oil, from what, again, my understanding, they're allowing some oil to pass through their land in particular. The oil that is leaving Russia through the Black Sea is basically like a no-go. They've deemed it fair game, it seems, to hit their oil infrastructure as far as passing through the Black Sea. Now, the second part that they have a problem with is there's this emergency route that passes straight through the Suez Canal into the Red Sea, and then passes down through, forget the name, I don't even know if it has a name. Probably does. It has to. But whatever straits down there by Somalia and Yemen, it passes down through through Djibouti and over to Mumbai. Right. That was the second route that they had. That was their emergency route. That's cut off because of the Houthi conflict. It's just not safe to go through. So even if they were able to, at scale, send ships through the Black Sea, it's not going to go through the Black Sea, or it's not going to go through the Red Sea, through the Strait, or through the Suez Canal. It's going to go out through the Mediterranean, passing through the Strait of Gibraltar, and then into this main line that you see. This main line would normally pass through the Strait of Gibraltar, down through the Red Sea, and up into the Arabian Sea and the Indian Ocean. Even that isn't happening, again, because the Red Sea is cut off. So you can see, I'm looking at Africa right now, but maybe I can zoom out a little bit further. Well, no, I'm just going to go straight up. So the only other port that they can send oil out of, well, there's a couple, but the only port of significance, because most of their oil infrastructure is to the west of Russia. That's important to know. Most of the oil infrastructure that they have, most of their infrastructure in general, is much closer to Europe than anything else. So you can see here, they have the Murmansk Arctic Terminal, and this is where they export much of their shadow fleet, much of their oil. And it either has to take one of two directions. So for India, it needs to follow down the Norwegian coast, around the Cape of Africa, South Africa, up past Madagascar into India. And the fuel costs to do this also raise their price of gas and reduce their profit margins, along with making their oil more expensive when we want to sanction it. So then the only other route that they have to go for China is they need to pass up through the Arctic, through whatever icebergs and challenges that they have, and they do have a lot of icebreakers. They're well equipped to do this, but it's still a pain in the ass, or pain in the butt, and they have to pass all the way down through the Bering Sea and into China for any of their maritime oil exports. And I do wonder what the logistics are, how often they really need to make that passage, but it is being done. We know that. Now, to what significance, I'm not sure. The more significant route for them is the route to Mumbai, where they have to pass all the way down through South America and then back up into the ocean, because effectively that whole area is just cut off from sea trade. And the only, their biggest buyer, or their second biggest buyer, is India. So really, we've put a huge cost on them to ship their oil to the people that they ship it to. And really, the only person who has an easy play right now is China. And obviously, we have our thumb on the scale with the majority of their energy coming out of the Strait of Hormuz. So it's a lose-lose. It's like, all right, they have ample access to Russian energy, but that's being tested greatly. And with the United States just showing India and China the cost of doing business with Russia right now, we're seeing that maybe this Iran thing is a lot bigger than you would initially think. That there's a lot more to do with protecting the United States dollar, the petrodollar, than anything else. So that's been my big assumption. That's kind of the big story that I've been following. And just to kind of recap everything, I don't foresee the conflict ending in Iran. It's just kind of a sticky situation. Once you touch it, you can't get it off your hand easily. Or if like gum, you step in gum, it's hard to get it off of your shoe. And then along with that, it only strengthens the U.S. energy case because we're still able to net export. And I did look into this. We are a net importer of crude oil only because we're a net exporter of oil-based products. So we do have some refinement capability that we do include in our GDP. So that was that nuance that I was talking about last time. So it's 6 of one, half dozen of the other. It could be anything. I could be wrong, but I just don't think I am. Obviously, maybe that was a little bit too proud. I could be wrong. And I'm sure there's multiple different factors that we just aren't privy to as to why things are the way they are. And I think I remember I was looking into Russian provocation, and that's how I found that whole thing about what's going on in Cuba. So, and that's very significant. And I guess a couple points on that for the people who are watching this, because I said watch my video. Obviously, this had nothing to do with Cuba or what's going on there, but it is, again, it's an important note. It goes to show that even though a lot of times the United States gets a lot of flack for their imposition on other countries and other markets, there is some Russian instigation that we're just not privy to. And I live a very busy life. To do this is very time consuming, but I enjoy it and I think it's important, and I wouldn't have it any other way. But that is to say, I can't easily research all these different topics that I want to. That's definitely on the list, to kind of see maybe what some of the precursor instigations were for the pressure of having Ukraine join NATO, and maybe all it was just this was the conflict escalation ladder for us to ultimately excuse me. This was the conflict escalation ladder we had to ultimately corner the market, corner the oil market, and kind of supplant the United States as the world's superpower. Because if we can do that, if we can cut off Russia's crude oil, make China dependent on our energy, or at least playing ball with us to have energy, then that secures the United States for a long time. So that's like the big deal. I really think that that's like the main strategy around this. And if you look at the oil market, you look at the numbers, you look at the geography, it just kind of all points to that direction. And we did hit the unipolar moment. And a lot of people have said, well, what did we do? What did we do at the unipolar? And the unipolar moment, for those who don't know, is when the United States stood alone as the world's superpower and had control over the world after the fall of the Soviet Union in the 90s. And, personally, and I guess I'll give a little bit of commentary just because, we got enough battery, been doing this long enough, and I'm almost positive nobody's made it this far. But if you have, you can learn a little bit about me and how I feel. And this will probably be for like 5 minutes and I'll wrap it up. But yeah, I definitely am a peaceful guy, don't believe in war. I think a lot of this stuff's tragic. It really is gut-wrenching. I think human life is worth so much more than this. Petty oil plays. And I get maybe, like, you could argue the significance of a lot more people would die if the United States isn't in power. Because, yeah, it's true, back in the day, war powers like Rome is a great example. Rome imposed their will through war. Mongolia imposed their will through war. And ultimately, it was a deciding factor on why they couldn't sustain themselves. The United States uses a much more softer form of that through the dollar, through trade. And we have seen the most peaceful era, technically, as far as the world's concerned. So, these could be seen as potentially necessary evils. And I'm an idealist for sure, mainly through my faith. I just don't see it really any other way. If everybody could see it the same way as I could, or as I do, we, wouldn't be in these situations. Unfortunately, evil is real. Is real, not to be confused with any Middle Eastern countries. I'm not making any type of dog whistle there, but evil is real, and maybe these are necessary evils for the greater good. But I just personally can't subscribe to that. So, yeah, it is what it is. We'll see how it plays out. But with that, that's the show. If you made it this far, thank you. If, hopefully, I'll be honest, I'm a little bit worried with what happened with that one video. To the tech overlords who, are part of making this digital infrastructure, I promise I'm just trying to sell my business here, get the word out. But to anybody who's listening, I know it's probably a small amount, but hopefully one day I blow up and become like a big superstar and have a big business and stuff like that. And maybe this has some super fans come back to look at the early days, because these are the early days. And I really do hope that I'm wrong about any type of ground invasion. But again, some of the signals for that, I don't know. But we'll see. I think I already have a decent enough track record, because I was pointing out that might be an area of conflict moving forward. So, yeah. So if you made it this far, I'm wrapping up. I gotta get done. I'll talk all day long, especially when it's the easy stuff like what I think and not hard facts like what we're going over. Yeah, share this, like, subscribe, definitely share it, chop it up, do whatever you want, try and get it out, try and get the word out. I think a lot of what I'm saying is factual. And if you do want to do business with me, and you're interested in seeing what it's like to be a client, please give me a phone call at 267-835-2403. Email me at nathan@atlanticfinancialmngt.net, or email, phone call, text, DM, any of those. And we'll talk about what might be right for you, what situations we might be, or what strategies we might be able to employ for you. But for everybody else who is, maybe going to sleep at this point, or just getting home, or doing whatever you're doing, it was a pleasure to have you all here listening to what I have to say. It's a great honor. And I hope everybody has a good rest of their day. Have a good one. Bye-bye.